All right, let's dive in. Today we're going to take a guided tour of the Indian financial system. Now, I know that sounds complex, but this is the vital network that powers one of the biggest economies on the planet. And to get started, we're going to ask a really big question.
I mean, really think about that for a second. An economy of 1.4 billion people. From a street vendor in Mumbai to a tech giant in Bangalore, everybody needs money to function, to grow. So, how does it all work? Well, the answer is this incredibly sophisticated system of markets, institutions, and rules that are all designed to get money where it needs to go.
So, here's our roadmap for today. We're going to start with the why this all matters. Then we'll meet the rule makers, the guardians of the system. After that, we'll tour the key districts of this financial city, where everyday money gets managed, where long-term wealth gets built, and finally, how your future is protected.
Okay, first things first. Why should you even care about any of this? Because financial markets aren't just for experts or for people on TV shouting about stocks. No, they are the absolute engine that keeps the wheels of the entire economy turning.
At its core, it's all about this simple but incredibly powerful loop. You, your family, you save some money and put it in a bank. Now the bank, that's a financial intermediary. It doesn't just let that cash sit in a vault. It channels it. It lends it out to a business that wants to build a new factory, or maybe to a family that's buying their first home. That movement of money, from savers to borrowers, is what fuels investment. And that investment is what creates jobs and grows the entire economy.
So if the financial system is an engine, you can't just let it run wild. You need rules, and you need referees to make sure everyone's playing fair. So let's meet the essential guardians who work to keep the whole system stable, trustworthy, and safe for all of us.
This gives you a quick who's who of the regulatory world. Think of the RBI as the governor of the whole banking system. You've got SEBI, who's like the police chief for the stock markets. Then there's IRDA, managing everything to do with insurance, and PFRDA, which oversees all our retirement funds. Each one has a critical job to do.
Okay, the RBI, this is the big one. It's the central bank. It's the banker to the government and to all the other banks. Its main job is to keep our money stable, to make sure the rupee's value doesn't go crazy and to keep the banking system safe. That stability is the foundation for everything else.
Now, if you've ever bought a stock or a mutual fund, SEBI is your guardian angel. Its whole reason for being, its #1 job, is to protect the interests of investors. That means you and me. SEBI makes sure the markets are fair, transparent, and that companies aren't pulling a fast one. It's all about building trust.
All right, let's walk into our first district. This is where the daily, short-term flow of money happens. This is the transactional heart of the whole financial system, the part that keeps everything moving day to day.
Now, it's super important to get the difference between these two. The money market is all about the short term. We're talking days, weeks, maybe a few months. It's where banks and big corporations manage their immediate cash needs. On the other hand, the capital market, that's for the long haul. This is where a company goes to raise money for huge projects, like building a massive new factory, by issuing things like stocks and bonds.
And the banking system itself isn't just one type of institution. It's this incredibly diverse ecosystem. Of course, you have the big commercial banks we all know, but there are also cooperative banks serving specific communities, small finance banks helping out entrepreneurs, and then you have NBFCs, which are non-banking financial companies, and they often step in to provide loans where bigger banks might not.
Okay, next stop on the tour. We're heading into the bustling securities markets. This is where companies come to get that long-term funding we talked about. And it's where investors can actually participate in their growth and hopefully grow their own wealth over time.
The best way to think about this is like buying a car. The primary market, that's the dealership selling a brand new car for the very first time. An IPO is a perfect example. The company sells its shares directly to investors and gets that cash. Now, the secondary market, that's your stock exchange, like the NSE or BSE. That's the used car market, where all the existing owners trade those same cars, or in this case, shares, among themselves. It's what makes investing liquid.
So, how do you actually buy or sell anything in that secondary market? Well, you can't just walk in. You need a stockbroker. They are your registered, licensed agent, your gateway to the exchange. They're the ones who actually execute your buy and sell orders for you.
For a lot of people, investing can feel really daunting. That's where mutual funds are a total game changer. They solve two huge problems at once. First, you get to pool your money with thousands of other people, which means you can own a tiny piece of a whole bunch of different companies. That's instant diversification. And second, they're managed by professionals whose whole job is to research and pick investments.
Okay, so let's say a company wants to borrow money by issuing a bond. How do you, as an investor, know if they're a good bet to pay you back? Well, that's where credit rating agencies come in. They're like independent investigators. They dig into a company's finances and give its debt a grade, like a report card. That rating is a crucial shortcut for investors to figure out how risky that investment might be.
For our final stop, we're heading to a really important district. This is the part of the financial system that's all about the long term, about managing life's biggest risks and planning for a future when we're not working anymore.
At its heart, insurance is just about protection. It breaks down into two main types. You've got life insurance, which protects your family financially if the worst were to happen to you. And then there's general insurance, which protects all your stuff, your car, your health, your house, from those unexpected things life throws at you.
Now, this is a really big deal to understand for anyone thinking about retirement. The whole system has been shifting. The old way was often defined benefit, where you were promised a specific pension amount. The new model, like the NPS, is defined contribution. That means your final retirement pot depends on how much you and your employer put in and, critically, how well those investments do. It puts more responsibility but also more control in your hands.
So, after our whole tour, let's zoom out and connect it all back to the big picture. Why does this complex system matter? Well, this entire structure, the banks, the markets, the regulators, is what allows savings to be channeled into the services and manufacturing sectors. And today, those sectors make up a whopping 3/4 of India's entire economy. That's the power of this system.
And I want to leave you with this quote from the law that created SEBI, because it just says it all. The mission is twofold. Yes, to develop and regulate the market, but look what comes first, to protect the interests of investors. That is the fundamental promise at the heart of the system's guardians.
And that really brings us to the final thought. The economy is changing at lightning speed. We've got digital currencies, fintech, and all sorts of new innovations. So the big question for the future is this: how do these financial guardians adapt and evolve to keep the system safe, fair, and working for everyone in the decades to come?